Good morning. Happy May 26th. It is Friday, and we are here at MarketStream.live to check on everything that is hot on today's open. And it is a down day right now. The Dow Jones, which was 30 points away from an all-time high, the only major index that did not hit an all-time high yesterday, at 21,055, down 27 right now. Really what's notable here on the Dow Jones is the fact is this resistance level, this line that I drew here, this I drew from basically when it hit its all-time highs. And it has been acting as a downward sloping resistance. Well, it settled above there last night, and so this is really going to be a little bit of a ground where not hitting all-time highs, mixed emotions right now. You're starting to see, we had durable orders and goods orders come out this morning. Now, this is something that I look at only because I look at this economic report as a proxy for business spending. And for the second straight month, we're seeing that it's basically flat. It came in down, but it's when you take out defense and aircraft, basically, business spending has been flat for the last 2 months. I want to keep an eye on that. That for institutional investors, you can see that with this little bit of a pullback here, that basically has put the brakes on the upside at this juncture. Taking a look at the S&P 500, you're seeing it's down ever so slightly, 2 points. Right? But again, the bulls are clearly in control. Use that 20 and 50-day moving average. For those of you that are new, never use technical analysis, that's fine. I use it as this picture, and it basically gives me some visibility. Like when you're looking out on the road and you're just getting a feel for the landscape, what do you see in front of you? Well, this is what I see in front of me. I see a market that's above these two moving averages. That means that the bulls are in control at this juncture. The NASDAQ, basically trading to the upside. I'm watching the FANGs, the Facebooks, the Apples, the Netflix, the Googles, the Amazons, and so on and so forth. These are the stocks that the market has been on their backs, and we're going to watch these closely. The Russell 2000, this is going to be focused on those domestically centric pieces of data, like what just came out in durable orders, what's going on in Washington. Once the president gets back from the G7 meeting, there's going to be a lot of discussion. Where's healthcare? Where's tax reform? Where's infrastructure? Where are all these components that we have been waiting for? Markets at all-time highs, and we have nothing yet. This is where the pressure is going to come on. Now, where I'm not seeing the pressures is not only in the general markets, but I'm also not seeing it in the world of volatility. And right now you're seeing vol right now trading up 10 cents at 10. It's basically at 10.01. This complacency is something that I want to keep an eye on. It's helping me also understand strategically what am I doing. If you're a bull, you basically are looking at stocks and you're looking at all-time highs. So from a valuation perspective, it's a little bit rich. But because there's so little volatility or no volatility in the market right now, you really have no other choice if you're a bull but to look at buying the outright, unless you start watching MarketStream and you use some of the option strategies that we use. If you're a bear, the problem is that you're trying to time the impossible. Yes, some of you might say that even the Lord took a break on the seventh day, and we're seeing that right now, referring to the 6 straight days that we've had the market to the upside. But with that being said, it doesn't mean that the market has to. So we'll watch this very closely. Watch vol as we get into towards the noon hour. Things are going to start to slow down. They already have, but things could potentially slow down pretty dramatically going into the long weekend. Let's see if volatility gets a little bit of a boost. What hasn't gotten a boost is oil. We anticipated this, and in full disclosure, my clients do have a position in oil. There was a precipitous drop after the OPEC meeting was concluded. Yes, they telegraphed everything to the T, 6 to 9 months, production cuts, but they didn't give defined levels. Are they going to go above or beyond the 1.8 million barrels that they're cutting back. You're already starting to see some of the smaller nations saying that they're not going to adhere to them, like a Venezuela, which is understandable since they're broke and rioting right now. You're going to have to watch this very closely. Plus, with the White House signaling when they released their preliminary budget report that they want to release and sell off half of the strategic reserve, that's going to put a lot of crude on the market, and there already is a glut. Even though we had a second consecutive draw when we saw the EIA report this week, still, we're well above the 5-year average as far as storage is concerned. So there's plenty of oil that needs to work itself off. And again, with Fed governors coming out and basically questioning whether or not we're going to continue to see the growth that we're anticipating, that has the market, specifically the crude markets, moving to the downside. And that's despite the fact that we've seen some weakness in the dollar. Bonds, they're reacting as you would think with the market, some uncertainty, some safety trade going into the long weekend. Bonds are upticking. You're seeing those bond prices come up. That means yields are going down. As a matter of fact, if you take a look at the 10-year, and remember, that's the one that I watch as far as, and I just put in US 10. Why? That's what I watch as far as a proxy of, do we still see the safety trade or safe haven trade picking up? And yes, I'm seeing it right now. I'm seeing that the bond yields are now trading at 2.24% on the 10-year. I want to see it well above 2.3%. As a matter of fact, I'd like to see it over 3% if we're going to really see some sustained catalytic kind of growth to the upside. But I'm not seeing that right now. And the bonds right now are trading to the upside in price. That means yields are coming down. That also means watch the financials. The financials have been trading pretty strongly over the last week or so. They are up slightly today, but they're in a battle zone, folks. As a matter of fact, look at how tight this is. This is the 20 and 50-day moving average. It's right now in this battle zone, as I call it. Just use these as context. If a stock is above those 20-day moving average and above the 50-day moving average, that means the short and intermediate term bulls, the people that have bought those stocks over that time period in the last 20 and 50 days, they're in control. If it's in between those, that means that there is a battle, that those that bought are questioning whether or not they want to stay long, and those that are starting to get a little bit negative might be adding to or developing some bearish positions. So when you have that kind of process going on, we could have some volatility in XLF and in the financials. Watch that closely, especially now that we have data that's coming out that's good, but still not great. And remember, we're trying to make America great again, so we need great to continue to the upside. Speaking of that, let's take a look at some stocks, though, to give you some context on after earnings. We had Costco come out, beat both on the top and bottom end, and as you see some of the headlines, Amazon still hasn't killed Costco. But Costco actually up $3.79. That's good for 2% to the upside at 178.52. It was in that battle zone right before earnings, folks. This is what I talk about here. I use this as context because that helps me understand, okay, if we're kind of in that neutral zone and I'm trying to develop an opinion, I look at what the overall trend was and it gapped down. It got into this battle zone before earnings, and then yesterday it popped above that 20-day moving average. So that told me in advance of earnings that it was now starting to get bullish. Doesn't mean that it has to go up, no. But when you look at it, stock went up on the open after earnings, Costco moving to the upside. And you had a little bit of a precursor to this because you saw traditional bricks and mortar. Take, for instance, Sears. I forgot what the symbol is for that, or even JCPenney, I think. Let's take a look at like JCPenney. JCPenney, traditional as they come, bricks and mortar. Grinding down here, but not going any lower. Let's type in Sears. SHLD. I couldn't remember that for the life of me, and I traded in there for a little while. Sears yesterday was up pretty big and challenging the 20 and 50 day. Now it's down today, but you're starting to see that these bricks and mortar, and these are ones that are in pretty deep trouble. unlike Costco that has a pretty significant footprint. Names like Ulta Beauty, they have stores, they have bricks and mortar, they also have an online. They came out great earnings, up $11, 4%. Big Lots, another brick and mortar, up 62 cents. That's good for 1.8%, but you saw it's come off of its best levels, but that shot through its 20 and 50-day moving average. Let's see if it sustains that move. What was interesting, though, was GameStop. Now, I know GameStop because my kids are there constantly, and the only reason why I let them go there is because it's a block and a half away from the house, and they got to walk there to get there. So if they're going to walk, the heck with it. But the point being is they have beat on both the bottom and top line, but stock is getting hit. So you start to see some profit taking. And look at this. Who is in control in advanced earnings? The bears started to get some control. And this is 3 days before. They tried to regain, the bulls tried to regain some momentum in earnings. Didn't get it. So you would have been able to look at this picture. If you were bullish on GameStop, you would really have to sit down and think, okay, but the market action, the short-term and intermediate-term traders, an institutional investor, which is really represented in the 50-day moving average, starting to get a little bit leery. See the recent price action. It was grinding before that to the upside, beating out and hovering over those 20 and 50-day moving average, and then it pulled back. This is context. This helps me understand what's going on in the market, and it also helps me start to discern what type of strategic approach. If I own the stock, do I want to start selling calls against it and doing a traditional cover call? Do I want to maybe trim some of my profits? Maybe I bought it back at a lower price in the $20 range or $21 range. It's trading at $25. Do I look to potentially take some profits as it's challenging its 200-day moving average but not getting above it? These are the things that help me make non-emotional trade decisions and investment decisions. And I'm doing it with complete transparency. All right, folks, that's it for what's hot on the open. I'm going to be back at 1:30 Eastern, 12:30 Central Time. I hope you will join me here at MarketStream.live, and we will see you then. Take care.